we okay? Look at the flow of information. I don't know if you guys can see it properly because it's a bit blurry on my side. Screenshots after screenshots. Look at the flow of information. This is the hedge. This is where the everything comes from, right? Hedge funds, pension fund. This is where everything comes from. Investment bank, exchanges, everything comes here, right? So something must be flawed. If we are here, do you see we are on the receiving hand? Like, let's be honest, we are on the receiving hand. Look at these people, smart money, slow money, smart money, right? Dumb, this is us, guys. This is where we are located, dumb money. This is where we are. So the one thing that I want us to do is that to change the thought process, how we look at the market, we must look at it differently from what they think we should be doing. Like what we should be doing, we should actually do the opposite, because now look at where the information comes from. So if the information comes from this level, don't you think like by the time it gets here, it's already like, or maybe is it me who sees that? Like right now, do you see right now when we are on the Zoom and I'm talking to you and I'm saying things about Forex, when you go and teach the next person, do you think you're going to say exactly the way I said it? Like the information does what? Like it's diluted as it moves down let's look at this in terms of it being a channel or whatever it might be. 1, 2, 3, 4. By the time it gets to 4, it's dead. And this is actually retail brokers. The information starts off from hedge fund, right? And then it goes to investment banks. So once it gets to investment banks, it goes to retail brokers. In which world do brokers want you to benefit, Mar? In which world are brokers happy as making, right? It goes to retail brokers. I want you guys to look at this. Trading educators. Now we come in here. Do you see the relationship between retail brokers and trading educators? There is a clear relationship between. So if this one is recommending this broker and saying that like, no matter what, if you want me to teach you, this is the broker you must use. This is the only broker you must use. Right? Therefore, there is already a conflict of interest between retail traders and retail brokers. The conflict of interest arises. He who works with the enemy is an enemy of this one, right? You cannot associate yourself with the enemy while he associates himself with your enemy, right? Because this is where we are. We trust this one, right? Who works for this one. There is a conflict of interest. So therefore, the narrative that is coming out and getting to us, it's a false narrative. Yes, true, Lurad. He who feeds you controls you. Facts. The trading educator is fed by the retail broker. The retail broker feeds this one. Therefore, this one has to preach the false narrative. The false narrative that we already having right now is the use of technical analysis. Why is it taught so much? Why is it taught so much? I want to understand. Why is it taught so much? Because like let's take a step back and actually question things. Guys, like legitimately right now, let's take a step back. Are the tools we are using really meant to benefit us, make us prosper, or harm us? And the way they are being taught, are they good or bad for us? That's the question that we need to start asking ourselves. In which world will an investment bank want a retail trader to, even an investment bank, I see it, a retail broker want a retail trader to win? In which world? That's why they're giving us high leverages. Picture you are allowed to place 0.10 on 1,000 rand account on Nasdaq. Like 0. That's a lot. 0.10. Guys, please don't tell brokers to come for me, guys. Now, here we are. You see, investment banks, they earn based on spread and commission, demand of financing, demand for false narrative, and demand for losing trades. Right? The inversion narrative, why the vast majority of retail traders, okay, this is UK and Europe, Asia pack and lose money, but we can add South Africa in the mix. Look at this. A book consists of 90% losing trade. A book automation. OTC position entered. Take other side automatically. Go like it. Whenever we are trading, if you're still on a losing end, you are already trading against the broker. You're not even engaging with the market. Right? So this is what I wanted to show you guys, like the flow of information, right? I think we got that out of the way. So if that is the flow of information, then now it brings us to a question: do we have to trust these things, or do we need to trust this? Which one? This or this? Which one do we need to trust? Your trend line? Okay, there it is. 1, 2, third time, kill. 1, 2, third time, death. You will make adjustment for as long as you breathe. The adjustment will be there. 1, 2, third time, it acts like it's reversing, death. Even here, at least here it gave you something. But like when you start doing this, you remove everything, right? The only time you're going to apply technical analysis is to look for someone. Until you have done analysis by yourself, like naked, nothing, on no trend lines. The one that I can say use is supply and demand. But yet it's not for execution, just to kind of like, okay, this is where I might look for my positions, right? That's why we have the outer supply zones or the outer demand zone on a monthly time frame. And then we move down to the smaller ones, because we know the smaller ones, they have no real weight behind them. It's only the higher time frame one that kind of like, yes, you know what, we have weight here, right? Ne? So that means when you analyze the market from this, the only thing, like when price is like this, can you see that you can actually look at it and say, like, you know what, this is actually my supply zone? Or am I the one who's seeing this? You can actually, even before the market came into this area here, ne? But you could tell, or like, I know, right? You can tell, or like, I know, it's around the corner. Like you can actually tell where the price needs to go, isn't it? You can actually tell where the price needs to go. It's only until you do this. Are we okay? Are we okay? This is a trend line. This is when you trade with technical analysis. This is it. This is a clear representation. What I just draw, this is a clear representation of what I just draw now. We're done. This is a clear representation of what I just drew. We're done. Right? What I just drew, this is a clear representation. Nothing above that. Because this itself limited you from seeing here that the probabilities of price coming here, they are there. Now you are focused on this level here. This is where you are focused now. You are done. Yeah, K dot, you know me, I don't mess with the bars. This is a clear representation. What I just did, it was a clear representation. The main objective of technical tools is to set limits. It limits your thinking. That's why we're saying that you must be in a position to spot the limitations behind technical analysis. So now when you are in a position to spot the limitation behind technical analysis, now what you are saying is that like 1, 2, okay, I know my brothers and sisters are located here. This is the reason why you need to apply all these things at the end. When you're done with analysis, then apply them. I know, go ahead, indulge. Because once you know where the price needs to go, therefore you know where your brothers and sisters are located. So once you know where your brothers and sisters are located, you wait for them to be panel beaten and then you come into the market. Because there is this and this are not different from one another. This is the one and the same thing. This is one and the same thing, just that that one is skewed. This one is horizontal. Done. An upper trend line, even in its definition, can be regarded as being a resistance because it prevents price from pushing to the upside. So how are we not looking at this in the very same light? How are we not looking at this in the very same light and say, like, you know what, this is bullshit. Sorry for the language, for those that don't curse. I don't curse as well, but I'm just saying. Are we okay? I don't worry. It's part of the indices. This one is going into the indices lock. You know, we don't play. It's going into the indices lock. It's going to be locked in the vault. It's going to be locked in the vault. It's going to the vault. Okay. This is what you're going to expect. Some of the concept I am speaking about here, you're going to get them in the indices crash course. Though this one is going into the indices crash course, but some of the materials, it's nothing bad. Don't worry, I'll create another one. There's still more Zooms that we're going to do. So do you guys get what I'm saying about this? So do you guys get what I'm saying about this? You get that, ne? Should we stop or continue? Let's continue. I hope you guys were taking notes. Those that are not in the indices crash course, I hope you were focused. I hope you. Sure. Do. So right now, like when we are looking at this, right? Now you see with that we have exposed the limitation that is created by this. right? There are women, there are Sahi, there are women here, like there are a few of them, but they are less than a hand, they are less than 10, I think. They are less than 10. So here we are, guys. So now we understand the limitation that is behind the trend lines, right? So now the fact that we understand the limitation gives us a bit of a added advantage. Look at this guy here. You see him here. He's breathing heavy, man. He is breathing heavy because that third retest, it was all he was hoping for. But the third retest didn't occur. What do you think he's doing? Because remember that the main is the liquidation process. And the liquidation process, look at the speed in which the market broke out of this specific area. Therefore, the acceleration of the decision-making process, right? And the increase in conflict within the hearts and the minds of the retail traders has been elevated. Can someone say elevation? This is church now. Can someone say elevation? Look to your neighbor, say elevation. I know, I see now. People are focusing now. This is a sermon, guys. This is a sermon. This is not just a, this is we're preaching in here, guys. We are sharing the word of FX. Yes. We are busy paging through different chapters. Next thing you see, when I start quoting from the book of Margin, verse 1, from the book of Margin, chapter 1, verse 3, it says that once you see it, you cannot unsee it. 1, 2, 3, right? And then once you come back to this area here, the very same principle that has been applied from the book of Margin, chapter 3, verse 1, says 1, 2, 3. So now you also even have an added confluence. Like when the market was coming into this area here, you had added confluence because you were looking at this from this. Actually, like you were looking at you had an added confluence whereby when the market retests here, it will be retesting the trend line, it will be retesting the resistant level, it will be retesting the supply zone. Like you had so many things coming together and agreeing with you on your decision why you should take a short positions. But with so many things coming together to agree, why did you take a loss again? Because of Exhibit A. The technical analysis tools that you were busy plotting and everything, they kind of like hindered you from seeing what was required, isn't it? Because you added so many things that it was very difficult for you to even see what was required. Are we okay? So now let's go to a daily time frame.